Hey everybody, and welcome to another episode of the Blockchain Homestead. Steve here, and I'm here to tell you about the Kimchi crisis of 2018. Yes. Apparently, the Korean government is going to be cracking down on exchanges or banning mining. I don't exactly see what they're going to be doing, but there's a lot of fear, uncertainty, and doubt. So we have our graphic here: fear, uncertainty, and doubt. And basically, it's just a fear tactic. The major money people don't want you invested in cryptocurrencies. It's just that simple. It's going to threaten them through disintermediation and efficiency, and we're eating their lunch, and they don't like it. So be used to this. Again, I've been in Bitcoin since 2013. I bought my first Bitcoin for $65, but I was buying Bitcoin in December at $4,000. This is a long-term trend. This is not an asset class that's in a bubble. This is a technological revolution that is in the innovator stage. That's a big difference. I encourage you to go Google technological revolution and S-curve. This is a very standard mathematical description of technology adoption rates and Metcalfe's law of network effect. It's not an asset class. That's where people get scared. They see a 30% drop, a 40% drop, a 60% drop. That's a normal market when you're talking about a new technology that's finding a foothold. So I'll give you another example. Okay, so I have here a chart. So this is a stock that in 2007 hit an all-time high of $360. In 2008, it hit a low of $160 for that session. So that's about a 60% drop, give or take. So if you were invested in that stock and you rode it up to $360 or you bought it at the top thinking, oh my God, it just went from $100 to $300, I'm going to buy in and be rich, right? Well, if you're looking to be rich quick, that's not a good decision when you're talking about technological revolutions, because there's a lot of uncertainty, or especially fear, uncertainty, and doubt. What happened after this, right? From 360 to 160, after that 60% drop, the stock is called Google. Maybe you've heard of it. And the low here in 2008 is now up here in 2018 at $1,100, give or take. Technology. Technology follows an adoption rate curve. Adoption rate curves have a very standard method of progression. They start at innovator stage, which turns into the early adopter phase. That happens roughly between, right around 3%, say. Between 3 and 4%, you switch over to the early adopters. From the early adopters, you go to the late adopters. From the late adopters, you go to the early majority, then the late majority, then the laggards. I encourage you all to Google S-curves and technology adoption rates. Look at the telephone, look at electricity, look at TVs, look at computers, look at the internet. Any of these are technological revolutions that start off very slow as the network effect builds. People find out about it, people talk about it. Then you hit the S part of the curve where you launch into exponential rates of growth. We're not even there yet. We're barely out of 2% of world population invested in cryptocurrencies. Once we hit that curve, which I think is going to be in March to April of 2018, we're going to see price rises that you won't even believe. But again, it's not a price rise. The price rise is just a factor of supply and demand of a adoption rate. People want to be involved. There are businesses that are trying to get into the blockchain, not because they want to get rich quick, although there's stocks that are going to be calling themselves block whatever and crypto whatever, and that's just a bunch of people jumping on this train trying to get rich quick. If you're looking to get rich quick, this is not the market for you. This is a technological revolution. It's not an asset class. So what's going to happen is, as this price, as people get in, the price is obviously going to be jumping up and down in fits and spurts. But I'm here to tell you that this, what was a 30% drop and now is a 50% drop, is meat and potatoes for this market. I've seen it go from $100 to $1,000 and back to $200 in the space of a couple of months. It's a choppy market. But on that, if you look at go to coinmarketcap.com and just spend some time looking at the way the market has evolved over the last couple of years. From 2014 to 2015, that's when it went to 1,000 and then back down to 200. In 2017, we started out in Bitcoin in the $300 and went from $300 to 20,000, and people were complaining about a 30% drop or a 50% drop. I get it if you got in December. I get it if you got in this week. I get it if you got in at Thanksgiving. But I'm here to tell you that this is how it works. If you're looking to get rich quick and you're not used to this gut punch, get out, right? Find somebody who'll buy your Bitcoins. I'll buy your Bitcoins. It's not the market for you. This is about strong hands. This is about recognizing that we're in the early innovator stage of a technological revolution. If you hang on, despite all the fear, all the uncertainty, and all the doubt coming from the big banks telling you why every day you should not be investing in this market, again, cui bono, who benefits from that sort of news, right? Look at who's promulgating this news and this fear. Okay, the smart money is in it to win it. And I encourage you to take a look at why you got into it. Really get in touch with what you're doing here. Again, if it's just to get rich quick, you know, you're going to be, your emotions are going to get the better of you. If you're in it to be rich, not rich quick, but if you're in it to be rich, wait till 2020 and then sell your Bitcoins. And I think you'll be a lot happier than you will be today. In the meantime, you're going to have a lot of fear, uncertainty, and doubt. It's all the media is going to be giving you. And it's meant to make you cough up your Bitcoins to either the rich people that are looking to buy in or the banks that are trying to keep you out of it. Right? Again, this is about a technological revolution that is redefining through efficiency and disintermediation every monopolistic market niche that the banks have created. We're eating their lunch. We're putting them out of business. They just don't know it yet. So I would sit down, hold tight, hodl, hold on for dear life. It's going to feel really scary, but I'll just ask you to look at this chart again. Google to 360 to 160 to 1100. Right? Add a zero over here, right? From 3,600 to 1,600 to 10,000. Add another zero from 10,000 down to, I don't even know what that would be then. But you get what I'm saying. Fear, uncertainty, and doubt, don't fall for it. This is a normal market in a technological revolution. It's going to be choppy, it's unregulated, but if you really believe in the technology and you really believe what's going on in the crypto space, you're not going to fall for this Kimchi crypto crash. Don't believe it. Don't believe the Korean exchanges. They're going to be fine. And if South Korea is stupid enough to start banning this, it's just that website is just going to go to another country it's going to open up, and they're going to have an exchange, and another place is going to have an exchange. Or what's going to happen next? Maybe the exchanges don't know this yet, but there's things called atomic swaps, where you can change cryptocurrencies from one to another, just like an exchange, but you do it within your wallet. Look at Exodus, look at Jax, and the really big player in this is going to be Pillar. I encourage you to look at Pillar, PLR. They're developing a wallet where you're going to be able to do exchanges right from your wallet to just about any crypto coin. What's going to happen to the exchanges then? Is any government going to be able to ban it when it's an app on your phone and there's a distributed server running the protocol? You cannot block it. You cannot regulate it. You can only hope to tax it. So keep that in mind. Stay strong, and I'll see you guys soon. Don't fall for the cryptocurrency crash, the Kimchi crash of 2018. I'll see you guys soon. Bye.